and artificial intelligence, both are considered very commonly. Whichever literature, if you source or book, textbook, if you read through, you will come to know that AI/ML is written wherever it is applicable. That's true for banking also. And this particular machine learning is again relevant with and source from, originated from computer science. This particular term machine learning is how it is used in banking, what all are the applications it is having, that we will finish up. I think it will take around 40 minutes, 40 to 50 minutes. And I would like to say that today I am finishing your digital banking subject entire syllabus. uh, Whatever textbooks you are sourcing, there is reference books or textbooks mentioned at the end of syllabus copy that you can refer. And part of my PPTs which I prepared, I will send it on mail ID of Mohit. That also you can collect from system department or computer department, so that you can prepare for your digital banking examination. Okay, so let's go to the main topic, machine learning, innovation and banking, with what is the latest concepts which are being used that may not be fully utilized in developing country like India, Sri Lanka, or other countries nearby like Bangladesh. But these all factors on account of low manpower availability and quality conscious customers available in countries in continent like Europe, America or Australia, they are quite used there. Hmm? They have that much developed system, banking system I mean to say, and they are using these systems very much ahead. They are in at certain steps which we have yet to reach in India, with the population living very densely in rural area, semi-urban area and urban area. Such type of artificial intelligence, machine learning is used. Definitely it is used, but it used by younger generation like you, educated people like you, me, and many more. But for a common man, for a layman, what is user friendly, that is accepted. What is easy for him, that is accepted. What is important for him, that is accepted. What is needed by him, that is accepted. What labors, or when we talk of financial inclusion, will have as an opinion, I am having my limited earning, I am getting attracted to the schemes which can give me attractive interest rate, or which can give me affordable interest rate with loan. These all things are needs of our maximum population. We at India, and with help of central government, making it easier for common people to have digital transaction on mobile phone, newly purchased mobile phone, which is these days right now available at 1200 rupees or even 1000 rupees, so that every other poor person could get included in banking sector or will become financially literate. This is what relevant to our market. Machine learning as such is used for prevention of money laundering, prevention of hackers, collected data's analysis, and many more. And how it is collected, how it is used, that we will see step by step. What is stated in first slide? Banking remain one of the most significant sector that has a very high potential in reaping the benefits of machine learning and artificial intelligence with the availability of rich data, innovative algorithms. Yesterday also I made use of this word algorithms. Algorithm means processes or procedures, innovative procedures and novel method in its various applications. What all are the applications? Processes are done through banking that may be traditional, modern, or mixed valued. Those who are having high scope and high uh, chances of usage of machine learning. Organizations are leveraging the benefits of innovative applications of machine learning in applications like customer segmentation for target marketing of their newly launched product. This is happening in sales promotion, marketing, hardcore sales. That market segmentation is done through machine learning, designing optimal portfolio strategies, detection and prevention of money laundering and other illegal activities in the financial market. When it comes to newly launched product in market, customer segmentation for target marketing is done through machine learning. When it comes to banking sector, financial sector, what it is doing, this designing strategies, detection and prevention of money laundering and other illegal activities prevention also in financial market. This is what done by machine learning. Adherence to the regulatory frameworks in finance, accounts and other operations and so on. This is what machine learning is used for. Now, I will go directly with applications of machine learning. One by one, we will talk of machine learning. These all applications are used in finance, banking and insurance sector, financial services and banking. Okay. One of the major applications of machine learning models and processes is in the extensive domain of risk modeling and management. What all are the risks involved while we are giving loan to an individual, to a corporate firm, or to anyone else whom we are offering loan? What risks are involved? That gets measured through machine learning. The risk modeling, credit and market is a critical application of machine learning. In data-rich applications such as credit risk modeling and scoring, designing mortgage schemes, the machine learning models have already made substantial inroads in comparison to scenarios such as low default credit portfolios for well-known parties in that lack the availability of data. Now, when we are becoming eligible to avail a loan facility as an individual or as a corporate entity, any company, factory, organization, institute, you can call by any name. Bankers do have certain criteria to lay down at in front of us. These all are the things which you require to submit us. You must be knowing that an institute when offering asking for applying for loan for that institute to avail loan as a facility, banks do ask for last 3 financial years bank statement, how much money you invested, which particular products services you have bought, what all are the salaries your employees are drawing, how much income tax you are filing for, and these all factors are studied by all bank employees. In such situation, doing this manually for many types of companies, different types of manufacturers, marketers, sellers, consultant, educational institute, or that may be any other type of service given by that particular company is difficult because they do have different types of pending and profit generating sources. Even as an individual, my profile, my portfolio may differ from other customer who's asking for same amount of loan. And in such situation, doing this manually is big jerk, big headache. In such situation, a machine will have its particular criteria to fill up. And when we are putting that data into that machine will do it in few seconds time. And that will give us green or red signal whether this particular party is eligible for uh, disbursement of loan or not. This is what related to risk modeling. Certain criteria will put forth. If the party has to avail loan, then these are the things: his CIBIL score, his past financial record, his bank statement for last 1 year, his fixed assets, his non-performing assets, his income generating source, the guarantee what he is giving, the reputation what he is holding in society. These all things are asked from, or actual site verification is done also, and what report is getting generated on actual site verification, that also is seen. These all factors are considered, and how much risk we do have when we are giving loan to a XYZ person or ABC firm, that is calculated through machine learning. Portfolio management. The portfolios are designed based on the recommendations of smart procedures that optimize various parameters, with return and risk being the two most important ones. What returns we will be getting as part of principal amount, as part of interest, as part of charges put on account of late payment. These all factors comes under return and risk. If the party is really capable of, eligible of giving or availing loan facility or financial assistance by a specific bank, that is also calculated. Hmm? Using the information provided by the users, such as their ages of retirement. You must have heard that after completion of age 60, a person cannot avail personal loan. Most of the loan facilities for what he should apply, his age restricts him. By the time a person attains age 60 or 58, whatever is retirement age by government rule, even a local cooperative bank also will not give him personal loan. A youngster of age 25 to 30, even 35, 40 can avail personal loan, provided in the next 5 years he will be having a good source of income in form of salary, in form of profit getting generated by his business. These all factors are relevant to age of retirement, amount of investment, etc., and other associated details such as their current age, current assets at hand. The process allocate the invested amount into diverse asset classes in order to optimize the return and the risk associated with the portfolio. Portfolio is your entire database as an individual, as a firm. And what all are the factors included into portfolio? They are mentioned here: age of retirement, amount of investment, current age, current assets. These all factors are relevant to portfolio. Once an initial allocation is made, the algorithm continuously monitors the market environment and changes the allocation so that the portfolio remains as its optimized level always. These artificial intelligence or machine learning enabled portfolio managers, known as the robo advisors, they are increasingly being used in real world portfolio design due to their superior adaptability and optimization skill to their human counterparts. What is advantages of these? They are robo advisors, and they are increasingly used in real world portfolios. because of their adaptability and optimization skill. Hmm? Human beings do not have that speed, that velocity, or that accuracy that what robo advisors do have. Now, the third application of machine learning is algorithmic trading. Algorithmic trading exploits the use of algorithms. Algorithmic trading is process trading or procedure trading to carry out stock trading in an autonomous manner, hmm, with the minimal human intervention. You are advised by a person, and with his bias about a particular company or on account of lack of knowledge, he may give you wrong direction, wrong or unsuitable advice. In such situation, you are at risk with whatever investment you made. But when it comes to algorithmic trading by machines, their chances of giving you profit are very high, or else at least they will advise you not to invest for specific duration. And on account of in future uh, circumstances what may happen, they will advise you in a different manner. Invented in 1970, algorithmic trading deploys automated pre-programmed stock trading instruction that can be executed very fast and at a very short time interval to optimizing trading returns and objective. Whatever we are trading in the stock market, Bombay Stock Exchange, National Stock Exchange, New York Stock Exchange, whatever it may be, what is expected by us, we should get return on investment, ROI. If my share price purchased today's stock is 72 rupees in a span of 3 months, at the most it should reach to 100. These all are common expectations by people who are trading in stock. Machine learning and artificial intelligence have pushed algorithmic trading into a new dimension where not only advanced trading strategies can be made very fast, but also deep insights can be made into the stock price and overall market movement. While most hedge funds and financial organizations do not make their trading strategies public, it is well known that machine learning of late is playing an increasingly important role in calibrating high frequency, high volume trading decisions in real time for critical applications. Frequency, volume, time, these all factors are very much important when it comes to machine learning, which is much higher by percentage, by rate than what a human being as an individual or in group can perform. They are much faster than human brain. Now, fraud, fraud detection and analysis. What type of frauds may happen that is detected by machine learning. Fraud detection and analysis is one of the most critical machine learning applications in the finance industry. There is an increased level of security and privacy risk associated with sensitive information, both from organization and personal front due to ubiquitous means available everywhere, having its presence everywhere, ubiquitous availability of connectivity, high computational power in devices, an increased amount of data stored and communicated online. You must have seen many Hollywood movies especially wherein the terrorist organizations that may be from any corner and nook of the world, they have huge requirement of amount, and as such any person or group of persons cannot fund them. In such situation, they take help of some experts who are unethical in their practice. They may be hackers, they may be fraudsters, they must be knowing in-depth technology and know how to steal, how to collect uh, codes, or what we say, password, user ID, and important, the most secret information of a bank, so that they can steal the money in $1 million or in crores of rupees in one shot or in one attempt. This is what their plan is. Like any robber, as an individual or group of 3-4 robbers, they are coming at cash counter, holding guns towards cashier and other employees and customers inside that cash counter, and saying them, do not move from your place or else we will kill you. No, with this attempt, they can, what we say, cash, they can snatch the cash, they can steal the cash, they can rob the cash which is available at that moment at cash counter or strong room. But banks as such do not keep cash available only in strong room. Any individual bank with their assets, with their available cash, or the cash which is available in soft form, online form, that may be in million and billion dollars, and they are having plans of robbing that amount, not the cash available at cash counter or any XYZ areas, localities, one individual branch. No, that will not serve their purpose, that will not satisfy their need. But with fraudsters, big fraudsters, they can rob, they can take into their account the cash which is available or the online amount of money which is available with any popular bank. This is what relevant to fraud detection and analysis. These issues have changed the way online fraud analysis and detection are being made. While detection in earlier days used to depend on matching a large set of complex rules, the recent approaches are largely based on the execution of learning algorithms that adapt to new security threats, making the detection process more robust while being agile. So these are relevant with machine learning of fraud detection and analysis. Loan and insurance underwritings. Again, where the machine learning in financial services is used, loan and insurance underwritings. Loans, credit, and insurance underwriting is also an area where the large scale deployment of machine learning models can be made by financial institutions for achieving competitive advantage. At large banks and insurance firms, the availability of historical data of consumers, financial lending, borrowing information, insurance outcomes, and default related information in paying debts can be leveraged in training robust machine learning models. With the data available of existing customer, potential customer, a particular model could be developed. Hmm? And that model will be ideal for lending money, for borrowing money, for any other particular application required for a bank. The learned patterns and trends can be exploited by the learning algorithms for lending and underwriting risk in the future to minimize future defaults. The deployment of such models can lead to a paradigm shift in business efficiency and profit. Paradigm shift is new change in business efficiency and profit. However, at present, there is a limited utilization of such models in the industry as their deployment are largely confined with large financial institutions. This is what relevant with loan and insurance underwritings. Banks and insurance firms have availability of historical data of consumers, past data of consumers, not one, two. That may be in 50,000 to 1 lakh and more than that. Financial lending and borrowing information. If they were defaulter, at what stage of their repayment they became defaulter? What was the market condition at that time? If he became defaulter, what were the reasons behind it? Is there any chance that there is majority of defaulters who have same reason? And if the reason is same, are they willing defaulters or unwilling defaulters? These all factors bankers have to analyze, and then they have to prepare one model, and that model will serve them as a guiding tool in future banking services offerings. This is what related to loan and insurance underwriting. Now, with machine learning, financial chatbots we have already talked about. Automation in the finance industry is also an outcome of the deployment of machine learning and artificial intelligence. See, this word automation is used for those transactions, work, steps to be followed, work to be done without help of human beings or muscle power. I have given one example in past. If we have to dig a pool, a pond in a traditional method, almost 300 laborers with different types of traditional tools, sickle, spade, then iron rod, and then ropes and wires and everything. They will require, that will require 300 laborers to work every 8 hours per day and for next 6 calendar months. Then only a sizable pond water source can be digged. When automation comes in help, what happens? JCB, crusher, and many other types of automotive devices, they will do it in a span of 3 to 4 weeks with the help of hardly 50 to 20 minutes. So this is what automation is understood. Automation in the finance industry is also an outcome of the deployment of machine learning and artificial intelligence. Deployment is relevant to applications, using it, deploying it, deputing it. Accessing the relevant data, machine learning models can yield an insightful analysis of the underlying patterns inside them that helps in making effective decisions in the future. In many cases, these models may provide recommended actions for the future so that business decisions can be made in the most efficient and optimum way. Artificial intelligence based systems in financial applications also have the ability to minimize their errors, learning fast from their past actions that also reduce wastages of precious resources, including time. Now, what happens? A person made mistake as a manager, as a decision maker, and loan facility was given to certain number of firms, certain number of customers. In due course of time, that manager left the job, got retired, got transferred. Being manual, record was not much properly kept. Now, at his place, if someone else is coming and holding the charge of bank manager, it's quite possible that the same mistake will be made by that person also. What difference it makes when it comes to machine learning? Machine learning will make note of all the steps taken. And when a defaulter is found, on account of what defaulter was found, that will be noted. And in future, advanced version of advanced version of machine learning model will work for the same task, and there that will not make any mistake, because they know in past they made a mistake, and which is kept as a note, which is kept as a reference. So these all factors are advantages of machine learning. So machine learning chatbots provide an effective way of interaction with the customers while automating many routine tasks in a financial institute. Because being individual person, I may be different from many other people. But when I do have need of personal loan, insurance, vehicle loan, home loan, loan against property, or any other specific type, the questions what I ask, it's quite possible with few words here and there, another 100,000 and 10,000 people also will ask. And for that reason, keeping full-time employees, keeping full-time human employees is not feasible. That could be done by a chatbot with ready-made answers for questions frequently asked. And they can be made available as a software, as an app, 24/7, 365 days a year. So this is what relevant with financial chatbots. The next one is risk management. Machine learning techniques are revolutionizing the way corporates handle the risk associated with their operations. It is relevant to manufacturing process again, storage of product, climatic conditions, transportation, and to minimize damage control also. Risk management examples are diverse and infinite, ranging from deciding about the amount a bank should lend a customer, or how to improve compliance, to a process or the way risk associated with a model can be minimized. Now, asset price prediction. What all are the assets we do have? Gold, silver, then property, commercial, residential. These all are assets. Predicting future asset prices is one of the most challenging tasks that finance professionals have to do frequently. 30 years ago, or you can say 32 years ago, in place like Class A city Kolhapur, the 3,200 square feet plot nearby city, what it used to come at 64,000 rupees. 20 rupees per square foot. 3,200 into 20 makes 64,000. Okay. Now the same plot of same size, 80 feet by 40 feet, 80 feet into 40 feet, is available at 66 lakhs. Now this asset price prediction is very, very important while asking people to invest in land, property, building, or any type of asset it may be. Why I should invest in assets? I may ask a banker, and that banker should have certain valid points for my satisfaction. Otherwise, I will not. In year 2005, gold rate per 10 gram was 6,000 rupees. Now what it is? 8 times higher. In 17 years, it is 48,000. Nobody was knowing that this much price hike will be there in gold rate. So these all factors are relevant to asset price prediction for future. The price of an asset is affected by numerous factors driven by the market, including speculative activities. In the classical approach, an asset price is determined by analyzing historical financial reports and past market performances. With rich data available of late, machine learning based models have started playing significant roles in predicting future asset prices in a robust and precise manner. This is very much required, precise. There shouldn't be a single mistake left. And these models are giving people as an investor proper guidance. So this is what where the applications for machine learning, and these all applications or apps or softwares are used by bankers. Now you must have made use of many other digital banking applications: Paytm, UPI, IMPS, NEFT, RTGS, cash deposit machine, ATM, credit card, debit card, then RuPay card, then mobile wallet, or and as such different types of these things. But machine learning, artificial intelligence, chatbots are common these days. Blockchain, then there are certain matters which are innovative, absolutely innovative, and not much used as a universal appeal. These type of models are available with huge sized banks, giant sized banks like Lehman Brothers in America, Bank of America. They have these type of models to make a study of their existing customer, potential customer, market environment, and certain things that help them to predict or to lower the risk while they are investing in their customers, giving them loan facility. And with future predictions, they can minimize their risk also. Even if a customer becomes defaulter, they have to study their past record. In past situations, when a person or a company became loan defaulter, what course of action we followed? And is it possible the same course of action we will follow with the existing customers also? So these all factors are relevant with machine learning, and I will stop here. It's almost 7:40, but with the size of subtopic what I was supposed to teach, I will stop here. If you people have any doubt, please let me know. Am I audible to all of you?
Yes, sir.
Uh, Now, when we talk of Indian market, when it comes to BFI, Banking, Finance and Insurance Services, BFSI, Financial Services Insurance, you also can say, we have very huge network of cooperative banks. And you will find it very funny that it becomes a news in local newspaper that this particular cooperative bank had opening of their ATM center. If you know it or not, I don't know. 1988, 34 years back, HSBC, Hong Kong, Shanghai and Banking Corporation installed their first ATM in India. And these days, our very own country's market, having large network of cooperative local banks, is launching their first ATM with pleasure and giving its news to local newspapers. It's not that on account of resources available or the network developed by these banks or any other such reasons. A cooperative bank which is operating in Pune cannot have its ATM in Hyderabad. There's no feasibility. There are certain banks like Shiv Samar Cooperative Bank, Shamrao Vittal Cooperative Bank, Lok Mangal Multi-State Bank, Veershaiv Bank. Certain banks too are existing on account of a specific community or particular caste also. So these all factors are putting limitations to their digitization. Till certain banks do follow traditional practices only. Reliability, trustworthiness is very much important matter when it comes to investment. Many local cooperative banks, credit societies become what we say bankrupt in a span of 2 to 3 years. What happened with Rupee Cooperative Bank? You can source through Google search engine. Almost all of their investors are now begging for the principal amount what they invested till they have to get it. So with the influence of cooperative movement in India, this digital banking as an application is not much used by local people on account of their trust towards these local cooperative banks and credit societies. Because certain people who are working there as full-time employee, they are either relative or known persons of that local area. Nationalized bank, while lending loans, while offering loans, do have different criteria, wherein many people have prejudice that they will not fit it to them. It's better to go and ask for local credit society for loan, whatever type of loan it may be. And it's a type of mutual understanding. Even if one EMI is not going at due date, there won't be any fine. There will be additional interest only charged. For any cooperative bank, CIBIL score is not much asked. There's no specific date for paying your EMI. But with all national banks or non-banking financial corporations or private banks especially, everything has to happen on time. That is not much accepted by our Indian customers. So these all are barriers when it comes to our digital banking, and which is very much difficult to operate. So students, I will prefer to leave now. If you have any doubts, please ask. Okay. Bye all of you. Thank you.